Good afternoon from the New York Stock Exchange. I'm Caroline Woods, coming to you from high above the trading floor on this Friday, November 7th. Here's what's on my radar to wrap up the week. It's been a rough one for stocks. Markets are back in the red today, adding to the week's losses. The Dow, NASDAQ, and S&P 500 are all on track to break their three-week winning streak. The NASDAQ is having its worst week since April, down more than 4% so far. All of the Magnificent Seven tech giants are lower this week. Nvidia's down more than 10%, while Meta and Tesla are off about 6% for the week. Speaking of Tesla, shareholders just signed off on Elon Musk's nearly $1 trillion pay package. About 75% voted yes, despite pushback from some big proxy advisors. Analysts say the approval likely keeps Musk locked in at Tesla and clears away a cloud of uncertainty. It also gives him the runway to chase his AI and robotics ambitions, including those Optimus humanoid robots he said could be bigger than cell phones. Musk still has to hit some huge milestones to actually earn the payout, like delivering 1 million Optimus robots over the next decade. In other news, consumer sentiment just hit its lowest level in more than 3 years. The University of Michigan's survey shows confidence fell sharply in November, down about 6% from last month and nearly 30% from a year ago. What's weighing people down? Concerns about the political gridlock in Washington are overshadowing the boost from near record high stock prices. And it's not just confidence taking a hit. Layoffs are piling up too. New data shows October job cuts hit the highest level for that month in more than 20 years, making 2025 the worst year for layoffs since 2009. Normally, we'd be talking about the monthly jobs report today, but for the second month in a row, the Bureau of Labor Statistics can't release it because of the government shutdown. Economists had been expecting a loss of about 60,000 jobs and an uptick in unemployment to 4.5%. Meanwhile, we're now on day 38 of the record-breaking government shutdown, and it's hitting travelers. Flight cuts kick in today at 40 major U.S. airports, including LAX, JFK, LaGuardia, and Atlanta. Operations will be trimmed by about 4% today, then ramp up to 10% over the next week. Transportation Secretary Sean Duffy says the move is a proactive safety step as the shutdown is putting strain on the system, with both pilots and air traffic controllers working without pay. In terms of other stocks on the move today, it's a mixed bag for consumer names. On the winning side, Expedia is soaring after strong travel demand helped it crush earnings expectations. It's the best performer on the S&P 500 today. Monster Beverage is higher after the energy drink maker beat expectations. Peloton is getting back in gear, posting its second straight profitable quarter and giving upbeat guidance for the holiday season. The company's betting its refreshed lineup of bikes and fitness gear will keep that momentum going. And Affirm, the buy now, pay later company, is jumping on stronger than expected results as well. Now, as for the losers, Airbnb is lower despite beating revenue forecasts and raising its outlook for the rest of the year. Sweetgreen is getting tossed from the salad bowl, down big after cutting its sales forecast again as customers tighten their wallets. Take-Two Interactive, the maker of Grand Theft Auto, is selling off after delaying the release of GTA 6 yet again. It's now pushed to November of 2026. It's one of the worst performers in the S&P 500 today. Looking ahead to what's on tap for next week, we'll be getting quarterly reports from CoreWeave, Occidental, Tyson Foods, Instacart parent company Maple Bear, Oklo, Cisco, Alibaba, and Walt Disney. That's all for now. I'll see you back here next week. I'm Caroline Woods at the New York Stock Exchange. Have a great weekend, everyone.